Today, the crypto market takes a break from the recent rallies. World leaders urge crypto exchanges to cut off Russian oligarchs.
But I really believe that regulation is the best thing that could happen to the cryptocurrency market, cryptocurrency world, the blockchain.
And I realized its dominance in performance was so extreme that it made no sense to own other assets, even with the fact that Bitcoin can be very volatile and have periods like now where it's down 50%. It's like, it makes no sense to own anything else. I had lived through the financial crisis and predicted it. I had also lived through the European crisis and predicted it, and had been in Europe and had to buy a generator and food and get cash out of the bank and keep it at home, right? That's how close we were in Spain to losing our entire banking system. And as a macro guy, I knew the issue was leverage. And leverage had meant that we had a unique problem, which was there's a layer of collateral and all of this debt is against the collateral. And usually you've got like 30 claims on the same piece of collateral. In fact, the average US Treasury has 32 claims on it, or it did then, may have more now. So therefore, who owns what in an unraveling? You know, who's going to get screwed? But the problem is that's a lot of claims on the collateral. So, because not everything is collateral in the system, only some things are used as collateral. Anyway, so when Lehman went bust, right, everyone's scrambling to find who owns what. And, you know, that happens all the time. So I started trying to start the world's safest bank with a bunch of family offices. I thought, you know, we could start a bank that doesn't use leverage, so then people can put assets there, their savings there, and realize they're safe, because it wasn't safe. People in Cyprus had all of their money taken out by the government. Right. So I'm like, okay, I need to do something about this, and I can do something about it. So I started that journey, and a friend of mine called Emil Woods, who was a subscriber to Global Macro Investor, who was running a hedge fund at the time, an ex-Goldman guy, he said, you need to look at Bitcoin. And I'd read a bit about Bitcoin, it's probably 2012, and I wrote the first macro piece on Bitcoin, which is, I think, the thing you referred to, which is 2013. I was just like, I saw it and thought, okay, so we've got two things here. One is this asset, Bitcoin, and that's a scarce asset in a digital world, so that's probably interesting. And secondly, we've got blockchain, which is a recorded ownership of everything. Okay, well, that solves the entire financial system, and this could be something useful for the financial system in itself as a new version of gold. I was nervous about all of these forking wars and everything going on. I'm like, I don't understand this. Let's wait and see. And then I had talked about it a lot, analyzed it, been involved in it, but hadn't been investing it again until 2019. Started sticking my toes in again because the market had been selling off. I was starting to get comfortable that, yes, that we got a recession coming. This is going to be a useful tool. And then 2020 comes along, and I was already positioned for a recession. And then over time, I started charting Bitcoin versus other assets. And I realized its dominance in performance was so extreme that it made no sense to own other assets, even with the fact that Bitcoin can be very volatile and have periods like now where it's down 50%. It's like, it makes no sense to own anything else. Now, price chart, I think, is the best guide of what the asset is doing, what its trend is, how people are perceiving it, and where it is versus what you might perceive as fair value. So, you know, you notice certain characteristics, like crypto tends to be exponential in price. So you put it on a logarithmic chart, it starts to make sense. You know, you look at things like copper and lumber, they tend to be mean reverting assets because they get met by excess supply. With high prices lead to excess supply. So right now with oil at $100, everybody wants to make as much oil as possible. So the price comes down over time. It doesn't happen with crypto because you can't. Right. So you need to understand the structure of markets, where the sentiment is. Is it overly bearish? Like a day like today, it got overly bearish. And so suddenly you start to see a reversal. So these kind of things are interesting. But my big discovery and why I really started loading up on Ethereum was another chart, which was a understanding that Metcalfe's law was the primary driver of all crypto markets. And in fact, almost all of the tech stocks that we've known today. Right. And once you realize that these are basically networks, and once you realize that crypto on networks where you actually own the network. So Facebook is a great network stock and it works perfectly on a log chart and it's an exponential, does all the things as you imagine. You can value it in Metcalfe's law terms. But the fundamental difference is shareholders and network users are not aligned. The shareholders make the money, the network users get the utility. Along comes crypto, you marry the network user with the owner. Okay, now you've got network effects upon network effects. This is like behavioral economics. So I start looking at the fact that Bitcoin and Ethereum charts just at different points when they, at the same point in the adoption cycle, were remarkably similar. And then it dawned on me, they're all the bloody same thing. They're all about adoption. So if you look at it and if you're honest with yourself, Ethereum, if you think about Metcalfe's law, it's about the number of users and then the kind of connections between the users and the applications built to create those connections. Well, Bitcoin's kind of a one-sided one, which is a bunch of people own it as a store of value, like gold. Nothing wrong with that, but there's not many applications built on it. When you look at Ethereum, it's like, holy shit. I mean, this is like the internet.
Right.
That moment is like, okay, this is far superior a bet. And then if you think about it in other terms, is let's look at Web3 as a network and a network of engineering talent, right? This is where it gets really interesting. Why is it exponential? It's because there are parts when everybody's trying to hire Web3 talent, right? Every single person I know is, right? And the actual pool of people who are capable of doing it is probably like 1,000. So even when the network flattens out and is now worth, I think, $200 trillion for the digital asset space, it's currently $2 trillion. That's 100x in market cap. That's huge. We've never had anything like this before. If you look around you, almost everything that we have in life is a contract. Mm-hmm. Whether it's a spoken contract, a written, me appearing on this together with you is a form of contract, right? So all of these things are contractual relationships that are everywhere. What this was saying is we can record all of them and verify all of them. Okay, so that's a really big concept beyond which most people understand. And you can understand that, okay, if that's the case, then a house can go on a blockchain. Yes, because the deeds, and then you don't need a notary, and then you don't need lawyers, and there's all of this stuff. And then the breakthrough is that, okay, we've got another thing that's going on in digital world, which needs solving. So this contract thing is a big deal. We don't even know what this means yet, right? When we talk in 10 years' time, we'll go, oh my God, we didn't even see that coming, right? So that's all happening. And DeFi is that. There's contractual obligations between borrowers and lenders. It's all happening on chain. The average person is seeing is a different breakthrough that came out of this whole concept, is in digital world, everything that gets digitized goes to zero in value, right? The price of data, the price of everything is zero over time. So how do you cement digital value is you have to introduce a system of scarcity. And an NFT allows a digital asset to have scarcity. Now, it could have come from the music industry, it could have come from a number of different places. It ended up being the art market. And where you can say this stuff that was basically worthless online. I mean, Getty had bought a bunch of image rights, but to police it is really bloody hard as well. So, okay, now we can create a one-of-one of value or a number and do that. So that becomes the value of an NFT. The next part of an NFT that you say, okay, well, if we give a bunch of people these, we can now identify a community. And then these people can be like-minded communities because they coalesce around an idea, which is this piece of art and this community, which is Bored Ape Yacht Club or CryptoPunks. So that becomes incredibly valuable. It's a membership to a club. A lot of people think of money as the primary objective. I actually like houses, as you can tell from the house behind me, right? Because this is where I live. This is the quality of life. This is my bank. This is everything. And so I like where I live and how I live. That's why I live in the Cayman Islands. That's why I lived in Spain. They're beautiful places and I live a quality of life. So that has always been my journey. But what I want to do is I always take steps towards the end game. I kind of live in the future always in everything that I do. So I always have a vision of my future self, or whether that's future state of financial markets, where I think it's going, whatever it may be, I'm always well ahead. And so I then can look, it's much easier to live in the future and look back and say, how do I get here? Than stand here today and go, I want to go forward. It's kind of weird. It's a psychology thing.